Hi there, and thank you for joining us at PhillipCapital's Market Watch. I'm Phil Gunn, Senior Sales Manager from Phillip Nova. In this episode, I'll be giving an update on the US Federal Reserve's Fed in short and Bank of Japan's BOJ outlook on interest rates. With the reversal of policies on the horizon, how will it impact the markets? Let's find out. The Fed held steady on interest rates in the 5.25% to 5.5% range at the conclusion of its March FOMC meeting and stuck to its forecast for 3 interest rate cuts before the end of the year. The FOMC's dot plot revealed a median federal funds target rate FFTR of 4.6% in 2024. This implies 3 rate cuts of 0.25% each. Additionally, the median projection for the FFTR in 2025 rose to 3.9% from 3.6%, implying 1 less rate cut. During the press conference, Fed Chair Jerome Powell noted that the strong job market would not deter the Fed from cutting rates. He mentioned that the US Central Bank isn't in any rush to cut interest rates, as policymakers await more evidence that the inflation is contained and that it won't be appropriate to lower rates until officials are sure inflation is on track toward 2%. The rate the US Central Bank sees as appropriate for a healthy economy. Headline inflation rose by 0.4% month-on-month in March, at the same pace as February's, above the Bloomberg median estimate of 0.3%. This translated to a higher headline CPI inflation at 3.5% year-on-year. US CPI inflation came in above estimates for the 4th consecutive month, driven by a strong labor market. In view of the persistent upside tick in US inflation in recent months, inflation is not returning to the 2% target anytime soon. The Fed will likely maintain its current FFTR unchanged at 5.25% to 5.5% beyond its FOMC meeting in June, delaying rate cuts even further. On 19th of March, Tuesday, the Bank of Japan announced several changes as a first step to normalize monetary policy. The BOJ agreed to exit the negative interest rate policy (NIRP) and raise the short-term policy rate to a range of 0% to 0.1%, previously negative 0.1%. Scrap the conduct of yield curve control, discontinue the purchase of exchange-traded funds, and Japan Real Estate Investment Trusts. The BOJ also returned to the more traditional conduct of monetary policy via guiding the short-term interest rate as its primary policy tool. The path of normalization is likely to be long, gradual, and limited. During the press conference and BOJ monetary policy statements, there was an emphasis on accommodative financial conditions will be maintained for the time being, and that it is important for it to continue to take an accommodative stance, implying another rate hike may not be coming soon. One of the conditions UIDA laid down for the BOJ's change of policy going forward will be if the central bank forecasts larger upside risk to the inflation target. In the January 2024 Outlook report, the BOJ projected the financial year 2025 core CPI, which excludes fresh food, to be 1.8%, which is below the 2% objective. Shown here is the daily chart of the sports gold. The buying momentum of gold remains strong, testing a resistance area of 2398 to 2429. There could be more attempts to push through this resistance area. Near-term support is at 2290. However, a retracement below this level cannot be ruled out. If support at 2290 is broken, a retracement toward 2156 will follow. Overall, the main psychological level 2000 is still establishing, and the main support level is now at 1991. The dollar-yen pair is showing an uptrend as it broke through the resistance 151.63. At this point in time, BOJ did not intervene following its April monetary policy meeting. The resistance level at 158.75, originating from the year 1990, suggests that if it maintains above this level, the pair could continue towards the next resistance level at 163.83. The BOJ's divergent monetary policy with the Fed and Fed's delay in cutting interest rates are the main drivers for the direction of this pair. Any changes in fundamental policy must be closely monitored to avoid being caught in a potential reversal. Phillip Nova offers forex trading on major pairs such as dollar-yen, spot gold, as well as various cross pairs via the MetaTrader 5 platform. Enjoy zero commissions when you sign up and open an account online. Trade on the go with the MT5 trading app on your smartphone as well as on your PC desktop devices with a simple installation. Enjoy 24-hour trading on major forex pairs from as low as 0.6 pips and access daily trade signals provided by the Equity Signal Center on a wide range of assets. There are no maintenance fees, and you can monitor your trades wherever you are, whenever you want. And that's all for PhillipCapital's Market Watch. Do remember to like and follow us on social media, and subscribe to us on YouTube. Also, tell us in the comments section, do you think that there will be a market reversal in 2024? Thanks for joining us, and we will see you soon.